I want to address some of the frustration with regard to the gold and silver. The price of gold is around $1,850 an ounce. The price of silver is around $22 per ounce. And I know many of us, myself included, had expected those prices to be much higher by now, especially given what's happening with inflation. After all, inflation is all anybody is talking about. It is now the biggest problem confronting the nation. You can't turn on the news without hearing a story about inflation. All of the companies that are coming out with bad earnings, they're not really blaming it on COVID or Putin. They're blaming it on inflation. Now, of course, our leaders in government and the Fed, well, sure, they want to blame the inflation on Putin or COVID, but the reality is inflation is here. It is a major problem, and that's exactly what many of us who have been buying precious metals were expecting all along. And what's very frustrating is now that we've been proven right, we bet on inflation. We bet on inflation by buying gold and silver. We bet right. All the people that said there was no inflation to worry about, they were wrong. Yet it's very frustrating that even though we were right, we're not getting rewarded for being right in the price of our gold and silver that should be much higher. Well, first of all, let me start out by saying inflation isn't new. Just because a lot of people are finally talking about inflation, that doesn't mean that inflation has suddenly appeared and it was missing in action all this time. Inflation has been with us for over a decade. I mean, it's been with us for many decades, but in particular, starting with the 2008 financial crisis, when the Federal Reserve responded to that crisis with quantitative easing, that was inflation. So we've been experiencing inflation under the guise of quantitative easing, because quantitative easing is simply a euphemism for inflation. The government didn't want to admit that its policy response to the Great Recession was to create inflation, so it named inflation quantitative easing, which sounded like it was a good thing or a smart thing. It was a way to dress up a really bad thing. Now, what happened early on with inflation, and the reason that nobody really cared about it, was the way the inflation entered our economy and the financial system. The greatest impact was on financial assets. Stock prices went up, bond prices went up, real estate prices went up, a lot of asset prices went up, and when that happened, a lot of Americans who owned those assets felt richer, and therefore they weren't upset that the cost of living was also going up because their wealth was going up a lot faster, at least on paper, but also the government was lying to the public about how much the cost of living was going up because it was reporting the increase through the CPI, and the way the CPI has been engineered, it really disguises a lot of the price increases, and so the public didn't realize how much prices were rising. I mean, they probably felt it, but they didn't see any official confirmation, and certainly investors didn't get that confirmation. They were looking at the CPI, and they assumed that inflation was under control when beneath the surface it was actually breaking out. Now, what happened with COVID-19 kicked the inflation into a whole new gear because the policy response to COVID was to create even more inflation after COVID than had been created before. QE4 was actually bigger than 1, 2, and 3 combined, which is something I was warning for years. I was telling people that when the Fed did do QE4, that it would be bigger than the first 3 combined, and it was. And in fact, when they do QE5, which they are going to do, it will be bigger than the first 4 QEs combined. But what happened with COVID, we sent inflation into a whole new gear because while we cranked up the printing presses like never before, we basically ordered people to stop working. We told people to go home and not produce goods and services, but just cash government checks. We wanted to replace the lost incomes with a printing press. So people weren't earning money anymore, but the Federal Reserve was printing money so that people could buy things that they were no longer producing. So it was a perfect storm of inflation, and I warned about it from the very beginning. When most people were talking about how COVID was deflationary, I explained that it would have been deflationary had the Federal Reserve and the U.S. government done the right thing and contracted money supply so that demand would fall along with supply. Instead, we did the opposite of what we should have done. We cranked up the money supply. We stimulated the economy. Even though the economy was producing less goods and services, we printed more money to buy a diminished supply of goods and services. And I predicted that we would see massive increases in consumer prices, and that's what's happening. And in fact, this is just the beginning. But the question that everybody is asking is, why isn't the price of gold and silver reacting to all this inflation? After all, at times, it feels like the price of everything is going up, going way up, except gold and silver, which doesn't make sense because gold and silver should be particularly sensitive not only to today's inflation, but to tomorrow's inflation, because gold is here forever. And so what gold can do is take all of the future expectations of inflation and represent them today in today's price of gold. Gold can discount all that future inflation. And that is the problem, because even though we have a lot of inflation today, investors still think we won't have inflation tomorrow. That is the real key. Yes, we have a lot of inflation, but investors are still not worried about inflation. Why? Because the Federal Reserve is promising to solve the problem. The Federal Reserve is telling the markets that inflation is going to go away, that the Federal Reserve has the tools to put this genie right back in the bottle before it does any real damage. And so don't worry, Jerome Powell and all his comrades are on the job, and they're going to make sure that inflation comes right back down to 2%. So don't worry about it. You don't need to go out and buy some gold and silver to hedge yourself against future inflation, because there won't be any, because the Fed's going to get rid of it. That is what the markets believe. And so rather than fearing inflation, they're fearing the fight against inflation. Because how is the Fed going to fight inflation? It's going to jack up interest rates. It's going to have a tight monetary policy. In fact, it's even going to start shrinking the balance sheet. It's going to start taking money out of circulation, quantitative tightening. It's going to reverse all that inflation. It's going to suck up that liquidity. And that is what is scaring investors out of buying gold and silver. They still have confidence in the Federal Reserve. Well, that confidence is going to be lost. I don't know why people still have confidence in the Fed, given how the Fed has gotten everything wrong, but I think this might be the last time they've really pushed the envelope when it comes to confidence, because if you go back to the beginning of this, the financial crisis of 2008, what did the Federal Reserve assure the public early on, back in 2007? The Fed said, don't worry about subprime. That's contained. It's no big deal. It's nothing. And they even said that if the housing market were to go down, which was something that they didn't expect, but they said the U.S. economy was so strong that even if housing prices went down, it wouldn't matter. The economy would just shrug it off. Well, of course, the Federal Reserve couldn't have been more wrong about that financial crisis coming or the Great Recession.